Before we start on Chapter 17, let's just briefly review what we covered last week. Chapter 16, first chapter of this course. Just a brief introduction of what managerial accounting is. Remember, we're trying to provide information as management accountants, provide information to management level in order to help them do what? Plan their goals. What else? Budget. Controls, and later on, of course, after producing the products, selling the products to customers, we want to have some feedback through evaluations of business lines. Okay, so this is a general goal of management accounting. Management accounting, our focus is on internal users rather than external users, right? So the first part we talked about in Chapter 16 is to differentiate what's the difference between financial and managerial. Second part, we talked about different trends in the business world. Nowadays, e-commerce, different information systems helps management level gather information on the costs from different departments. So we may have, for example, advertisement costs on the products. We have costs from borrowing money from third parties. We need to pay back interest. We have costs from direct materials we purchase in order to produce the products. We have costs from hiring people, direct labor, right, or indirect labor. We also have costs incurred when we purchase machines, when we pay utilities, pay rental on the plant, and also on administrative offices. So all of these informations are very important to factor in pricing of products in order to make the business generate profit. Because we don't want to underprice it, that it doesn't cover our cost, and we're having red numbers every year, not green numbers, right? We don't want to overprice it, and we're not competitive in the industry. So it has to be somewhere in the middle. And it's very important to understand the cost components of production. So today we're continuing on the same topics. We're going a little bit deeper. We're looking at the entries of these activities. How do we represent them in debits and credits? How do we post entity accounts and understand a detailed view of the flow of the cost? From materials, and then the working process, factoring in, of course, employees, labor cost, and we need to produce the products, turns it into, convert it into finished goods in order to have customers purchase it. Okay, so today we're going to take a closer look at a detailed flow of these costs and how do we represent them in journal entries. First of all, what is journal entries? How do we journalize, say, purchasing and specific type of material? Just try to guess it. I'll go over this later. Purchasing material is considered a type of asset.
That's not inventory is not.
Material will be a type of asset that we're using to generate our product, to generate the product, right? And when we purchase a material, that's an inflow asset, what's outgoing?
Cash.
Either cash or payment later, accounts payable, right? So that would be one example of what we're covering today, the first example. How do we journalize materials when we purchase it? And then how do we journalize when we start using the materials in the production line? How do we represent these in journals? After this, we hire people to help us assemble the products. So we have salary that we need to pay them, wages. How do we represent that in entries? How do we debit and credit this particular activity? When the work is in process, not yet done, when some portion of it is completed, and how do we transfer that into finished goods inventory? So this is pretty much the same account that you learned in financial accounting, just inventory. Just now we want to point out that it's finished inventory instead of in process. So we separate inventory into more detail. After finished goods, we want to sell them to customer. So what happens when we actually sell them? Turns into cost of goods sold. Okay, cost of goods sold. Of course, at the same time, we generate cash inflow, revenue, could be cash or accounts receivable. Okay, and then for another order, it goes on again. We purchase materials, hire people, transfer them into finished goods, we sell them. Each and every order, we go through the same process, and we want to assign the cost to this in order to set the price to generate revenue. This is the broader picture The last class, we also talked about classification of cost. Tell me some of the examples. Cost component. We have product cost that breaks down to, for example, direct materials, and what's the opposite of that? Indirect materials. Indirect materials refers to the things that shared upon different orders. So it's hard to trace back to one particular one. Right? For example, the machines we're using, when we depreciate it, the machines are used for different orders at the same time. You can't just say this depreciation expense belongs to this order and doesn't belong to the other. So there has to be some way to just pick a portion and assign it to different jobs. This class will be learning how to assign these indirect costs. Not just indirect materials, what are the other indirect costs? Indirect labor. Very good. So an example of indirect labor would be janitor, because it cleans up the entire plant. It doesn't just belong to this job order, this particular space, clean up the entire site. Okay? Managers, exactly. Plant manager's salary. Also, they oversee the entire production line. So it can't just be traced to one particular order. It has to be taken together, all the orders, and later on we'll talk about a rate, how to differentiate them, how to particularly assign a portion to specific jobs. Other examples would be utilities, rental expense on the entire manufacturing plant. All of these has to be taken care of in manufacturing overhead account, indirect cost account. Right. So this is pretty much the basic what we talked about last week, the grounding for this new chapter here. And today our focus would be going a little bit deeper, how to journalize the transactions on purchasing direct materials, assigning direct materials to work in process, how do we journalize direct labor, overhead costs. For the first part, we want to differentiate two different approaches to assign cost, job order and also process costing. So Friday we'll be covering, or next Tuesday we'll be covering process costing. These two classes will be focusing on job order costing first. Okay, so today we have time, and then we'll go over what happens when we complete the goods, and what happens when we sell it. How do we journalize that? So that goes back to a portion of financial accounting when we learned that class. Then we calculate unit cost for another type of business, service company. Okay, so again, here our focus is manufacturing company. Today, the first part of the class, we're also focusing on manufacturing company. Friday, we cover service company. It's very similar, just without the inventory part. Okay? Process costing, it's an appendix. We'll cover this next week. So first of all, what's the difference between job order and process costing? Again, on a broader picture, before these two approaches of assigning cost is what we're trying to get to is pricing the product. Before pricing the product, we need to know the cost of the product. The accounting department is all about gathering information from different departments in order to put together the cost of the product and to price the product to gain profit in between. Okay, so these information, what you've learned here, is important to help managers set the selling price and also to help determine what's the ending inventory's value, what is the goods value that you sold to the customer. Three main topics. Set the price. How do we determine cost of goods sold? How do we determine ending inventory's value? That's the goal for understanding all this. So to understand how to assign a cost, again, our focus today will be job order costing. Next week we'll be covering process costing. Both methods have the same goal. We're trying to assign cost of products. That's the same, just different approaches. Okay, so it's more appropriate for some business to use this, some other business to use another type. In the next slide we'll talk about the difference of those businesses. Okay, so what is job order costing? This is suitable for the business that does customized products and does services to clients in each and every client engagement contract is different between the customer group. So meaning that, for example, Dell company sells computers, and there's a button online you can see you can customize your own series of computers that you want to purchase. That's the type of business that we're talking about that's suitable for job costing system, job order costing system. Why? Because the product I purchase may be different from the product you purchase. And since there are different features, for example, perhaps the video card is different, perhaps the capacity of the memory is different, monitor size is different. Different features of products, the cost incurred in that order is different. So how you price it, how you collect sales revenue from customer, the amount will be different. So for customized products, for batch orders, you consider using job order costing as more appropriate method for these type of business. So as opposed to this concept, what process costing approach is suitable for is for the companies that does identical products and massively produce it. Okay, so for example, many examples you can think about. Coca-Cola's, soda companies, all the different snacks. Sorry?
Buildings.
Okay. That will also be an example, and also Procter & Gamble, the different products they have. Pretty much the products you can purchase from many different types of grocery stores. And as long as the label you see is the same, you can be assured that when you purchase what's inside the bottle, what's inside the box, has the same quality. Right? So those are not customized products. Those are made available, massively produced. So when we trace the costs for these type of business, we usually do not trace them by order. Our customers order one by one because it makes no sense. Each of them has the same type of product. If I purchase a bottle of Coca-Cola, it's exactly the same as yours. So how we trace these costs, we trace them by the production line, by the different working stages. For example, Coca-Cola mixing department, mixing stage, we trace the cost of that department. Mixing the water with the ingredients, secret formula. Then we move into bottling department. Those ingredients bottle up into Coca-Cola shaped bottle. Next department would be labeling, putting a cap on it, ready for sale. So for these business, process costing allows these businesses to separate the cost from different departments instead of tracing the cost to different orders. Because all these orders, you're giving them just different quantities but the same identical product. We're focusing today, on Friday, we'll be focusing on job order costing system. Again, for customized services, for customized products, it makes more sense to calculate the cost per order instead of unifying the cost from different orders, because all of them is different. Right? So how we trace them, we accumulate cost per batch, per job, instead of separating cost per process. That's the main difference. Customized services, customized products falls under job order costing. Not customized, same product, identical, massively produced, falls under process costing. Again, these are just two approaches to get to this same goal. The goal is set the price for the product in order to set a retail price, to gain sales revenue and generate profit. They're just two different approaches, but they're reaching the same goal, setting the appropriate cost per order, or setting the appropriate cost per product. Another example for job order costing, auditing firms. So Big Four auditing firms, they have different clients, publicly traded companies. Each and every client, their company size is different. But how they operate their business is different. So the agreement of auditing their statements, what they're sampling, what they're determining as materials to sample more, is different and varies from different clients. So definitely the audit fee you're charging these companies will not be the same across all the companies. It will be different case by case. This is another example. When you sign the agreement, collecting audit fees, the standpoint of audit firms, each and every client's case is considered an order or job. So they're not costing the same because the process to audit them is different. look at what the flow chart looks like. So this is for job order costing system. This is what we're focusing on this week. Again, we're starting from before producing the products, what falls into the production line. Materials, labor, indirect materials, indirect labor, and all the other indirect costs. Those three categories, we talked about this last week, and now we're trying to assign the cost to different jobs. You can think of different jobs for service company, different clients, or think of it as different orders, purchase orders. Okay, after assigning the cost, we now know the cost of the finished product, finished service we provided to customer. Then we can determine what is cost of goods sold, and what is the cost of service that we provided to customer. And today we'll also be learning how to represent these in T accounts and journal entries. You have to understand when we post these things on the right-hand side, left-hand side, whether it's debit and credit, what does it mean? Okay, so by looking at the numbers, you have to know what happened on top. Is there materials coming in? Is there materials transferred to work in process? Or is there finished goods transferred to customer's hand, becoming cost of goods sold? Okay, so this is a summary of what we're trying to get to this week. As opposed to this, process costing again, we'll be separating the cost, tracing the cost based on different departments. As you can see here, we have a mixing department's cost, we have molding cost, we have packaging cost. So for example, if this is a company that produces crayons, maybe mixing the wax, and we need to mold it into a pencil shape. Different department takes care of different process. And we need to package it in a box in order for customers to purchase it. Then finally it becomes finished goods. When we sell it, it turns into cost of goods sold. And the point here is that we are separating the costs, assigning the costs based on different process, different activities, instead of using an order as a unit. Okay, so we'll be covering this next week. Just want to let you know the differences between job order and process costing first. Our goal again, what we're trying to do is accumulate a cost for the products, for the service, in order to set an operating price. So we'll be tracing the cost that's easily assigned to each and every job. We call them again direct material and direct labor. Just refreshing your memory from last week. Now for the costs that are harder to trace to particular orders, we call them indirect cost. Another way to say this, manufacturing overhead. How we assign the cost to these job orders would be the tricky part for this chapter. Okay, so this is the part, hopefully we may get to this at the end of today's class or Friday. This is the portion that will require more calculation. Since it's indirect costs, it's hard to trace to one particular order. I have to use some sort of rate to assign a portion of those to each different orders. Okay? Any questions so far? We'll move on to the first exercise. Take a look at these two examples here. Try to see if we can determine whether it's more appropriate for these companies to use job order, costing system, or process costing system. want to try the first one? Refrigerators. Process costs. Why do you think it's process costs?
I know you said that with the job order, it's more based on unique products. I can see refrigerators unique. I think probably considers a process cost.
So it's more massively produced instead of having unique features. It's different, right? Usually it's available there in the store for you to just pick it up, unless you have very special needs. So for the most part, this is considered process costing, very good. Again, for a job order, it's useful for the companies, for the manufacturing sites that are producing different products based on different customers' needs. So massively produced products, those that you can pick it up available, that are available already, you can pick it up directly from the store, usually falls under process costing. Okay, what about the second one? Job. So what would be like the word you want to highlight? Specialty labor. So it's not regular ones, specialties, and they have special features. They're considered job order costing. Okay, what about a third one? Luxury yachts, usually it's not available elsewhere. You probably need to order it up front, and you need to add in your features based on your needs. If you produce this product, was job order costing is more proper for these businesses to trace their cost based on each client, each customer's order. A professional services firm, job order, I made an example, or the auditing firms. This is an example. Okay, so different clients, they charge them differently. The audit fees will be different, not a unified number, because different companies involved in business operations, and they may need to sample different types of inventory, different processes. A landscape contractor.
Process.
Wow, which one?
Process.
More job order based. More job order based. Now in reality, there are some companies that use a mixture of costing systems. So for example, they may have readily available products for customers to purchase. Of course, they may have customized at the same time. So there are cases that some companies applies two different approaches. But for a landscape contractor, usually it's based upon customers' need, and each and every contract will cost in it. Right? Custom home builder, also what about cell phone manufacturer?
Process.
Process, massively produced. Frozen pizzas.
Process.
Multi-vitamin. Process. Tennis shoes. Process. Okay, so here, the terms that I need to highlight when you look at each problem: specialty, customized. These are the terms. Luxury, that usually falls under job order costing. All the others, regular products, also process costing. Okay, any questions before we move on to the next section? Yes.
Just a quick question on manufacturer of luxury yachts.
Yes.
Job order costing.
Job order costing, and usually for specialty, the luxury ones that are usually based on clients' needs, and they may manufacture a little differently. So it's not like they might have the special features for each type of series that are readily available for customers to purchase. So again, I said some of the companies uses a blend of both of them. Okay, so there are some gray area in these examples. Some companies may use both. They have readily available series, they have customized at the same time. Okay, so don't worry about this on exam, so you won't see those gray questions. Okay, 51. Is that a yes? Yeah. 51. how we journalize and take key accounts for these manufacturing processes activities. Okay, so first of all, we have customer's order that comes in. Let's say a job order, we label it as number 293. Of course, requires materials, requires we hire people, companies to hire people, purchase machines, definitely has a place to help to start, produce, and manufacture the products that customer orders. So these are the three main type of cost components for each job. Once the materials start being used, once the employees you hire start working for you, once the machines start to be used, the cost transfers to work in process. Okay, so this is a general flow, just like what I listed here on the whiteboard. After some of the products are being produced, it transfers to finished goods, and then when you sell it to customer, it transfers to cost of goods sold. Okay, so this is just letting you know this flow of what we're talking about, the manufacturing line, and each step will be journalizing entries. Start from job orders that will trigger the production line for this business. Purchase the required materials, hire people, have indirect cost incurred. Start producing the products, finish the goods, and sell it to the customer. Okay, so the first step we need to take care of is materials. Let's say this order is from Macy's company. We want to order, let's say the working example is 10 Excel DVDs. So this job order requires materials on DVDs, discs, on the casing of the DVD, and of course the intellectual property recorded in it. And at the end we have the labels, cost incurred, print something, the title, the label, what's in the CD disc. So all these materials factors in the account called materials inventory. And notice this is not the same as finished goods inventory. It's different. These are raw materials, not yet produced, not yet converted into finished goods. So materials inventory, these are assets to the business. Based on different job orders, we may need to purchase different types of materials. But again, now we want to separate these materials based on order, as using order as a unit. So for this particular order, we need to purchase material that costs us altogether $367,000. And we further break it down into direct ones and indirect materials. Okay? So direct materials, again, the case itself, the CD disc itself. Indirect materials could be the labels cost, the printers, cartridge that you purchase, the machine's depreciation cost is later on factors in manufacturing overhead. The indirect cost here that relates to materials, we need to journalize this entry when we purchase those raw materials. Okay, so we debit material inventory, increase asset account, we credit accounts payable, this is a liability account. Or if we pay directly by cash, it will be credited cash. Fill in the T accounts here. Materials inventory purchased all together 367, and accounts payable also 367. Now, materials inventory is a general ledger account, and it can be broken down into two subsidiary ledger accounts. So remember, subsidiary ledger account is just components of the general ledger account. So you can break it down to direct materials, a portion that is a part of materials inventory, and then indirect ledger. So this is the first step, purchasing materials. When we start using the materials, we need to transfer a portion of these purchased materials into work in process inventory once we start producing the product. Okay? If we haven't started this process, it belongs to materials inventory. These are raw materials. Okay, so whatever number, the value of inventory you see here is raw materials value. If you start producing a product, it falls under the second category, work in process inventory. Okay, so what happens here is Once you start producing the product, the casing, the disc itself, the value of that falls under work in process. The indirect cost, remember the printer's cartridge, the labels, falls under manufacturing overhead. Again, that's an indirect cost category. So indirect materials goes into that category. Direct materials goes into work in process. Okay, so the journal entry will look like this. Let's say from all the materials that we purchased earlier, we use $355,000 of work in process, of inventory, direct inventory, to transfer to work in process. And now a portion of that we're using as indirect materials goes into manufacturing overhead, $17,000. Okay, so the previous slide was purchasing materials. So this is just the materials we purchased in this season. Remember, at the beginning, we will have beginning inventory carried on from last year. After purchasing new materials, we start producing the product. Those direct materials factors in work in process. Indirect one goes into manufacturing overhead, indirect cost. So here we're just trying to assign different costs to different T accounts. Compared to this,
Because the slide before, it was 350,000.
so I mentioned that this is just the new purchase materials that we did this year, and we definitely have some of them, assuming that it has, because we have beginning inventory from last year, from last period. Right, so these are the newly purchased ones, and we're assigning more to it because we still have inventory materials. Okay, so since we're on this topic, let's just review what we covered last week. How did we get direct materials used? Remember, we start off from beginning direct materials. Right? Beginning direct materials, then we do purchases. So this is what's shown in the previous slide. Purchases. These are the 367. And let's just assume that we have $10,000 worth of inventory from last year. Okay? And then this comes with freight charges. So this is assuming there's already freight charges is already included. Third part here, in order to get the direct materials used, we compare it against anything, what's left. But we will only know this at the end of the year. Or if it's per order, we only know this after we produce jobs, products. At the end, whatever's left goes into this, and we can figure out the direct materials used. Okay, so the step we just did in this slide here, purchasing the materials, and now we're transferring part of the materials into work in process. Okay. Into work in process of the direct materials used, manufacturing overhead, $17,000 is the indirect. So remember the second stage we talked about last week, a part of the direct materials used here, using this example, would be $355,000, transfers to, this is the work in process stage. For each stage, we start from beginning, work in process. Now we add in $355,000 here.
For materials inventory, it's $372,000. Shouldn't we credit that to material inventory?
Yes, we are crediting
Okay, so
$372,000.
it's 355 of it.
Oh, sorry. Yes. Okay, so this example here tells us that beginning is 70,000. We made new purchases, 367,000. Let's just change it to this. And now, once the production team requests the materials to start producing the products, a portion of it turns into work in process, the indirect portion turns into manufacturing overhead. Right? First two entries. Now, besides materials, of course, we need to hire people to help us assemble the product, so we will incur labor cost. Okay, so that we'll take care of a little bit later. Next slide we're showing here is just letting you know, having a feeling what exactly happens in the business. Usually when production team requests the materials, and then we'll return it into work in process, into indirect manufacturing overhead costs category. We have materials requisition forms to fill out. So usually nowadays, oftentimes it's online. Basically this captures the materials, what category of material is, the quantity of materials, and the cost of the materials altogether. Okay, so this is just specifically for job order number 16, what is the material used for this order. So production team requests the materials, purchasing department sends over the materials to start production line, and this is the cost of the direct materials. Just an example, a portion of the direct materials. Now this direct materials information later on factors in this job order record. So this is the job order that earlier I talked about, requested by Macy's company, 10 orders of DVD sets. Direct materials for this is $120. This is the first part that we completed. Okay, the second part, we need to factor in also direct labor cost. And then comes manufacturing overhead cost. And add these together, we can figure out the total job cost in order to help set the retail price per job. Okay, are you ready for example? Is there any questions for that? Now we're just talking about direct materials. Okay, so you know how to purchase the materials. We would debit materials inventory, credit accounts payable. And we're starting the production line. We transfer direct materials into work in process, indirect ones into manufacturing overhead, because it's an indirect category. Okay, so based on these two entries concepts, try to see if you can work on this example. This is a company that manufactures backpacks, and these are the costs incurred. They purchase canvas, they purchase sewing machine, oil, and now once they start producing the backpacks, this is the cost that actually falls into the job order. $64,000 of canvas, $250 indirect cost. So how do you journalize this? Purchase entry and assigning the cost to work in process, manufacturing overhead. Again, we have beginning inventory. Okay, so this is just the new ones that we purchased. It's not all of the inventory we have. If you follow the textbook, it will tell you the beginning inventory is $70,000 to make new purchases, and now we're assigning this one cost. Okay, so this goes back to this concept here. Beginning inventory, new purchases, and we'll start the production lines, and And we have ending leftover direct materials to determine what's actually used. To understand this problem, we have to know there are different types of materials being purchased. Are they all direct, all indirect, or
The purchases of the canvases and the purchases of the sewing machines, I think they are considered overhead costs, right? Are we added into the inventory?
Your answer is half correct, because there is a portion of the indirect cost. However, there's definitely direct material costs for each and every product, right? So if we go back to last week when we talked about what is the definition of direct materials, the things you can actually see in the product. So if you look at a backpack, what are you seeing here? You can also see sewings, but here we're talking about the sewing machine's oil, which is a part of, considered more minor. Even a sewing part is considered minor to the canvas itself, right? Okay, so the little bits that you add on to the product, again, it's not that it's not important, it's just we're classifying them into main cost and minor cost. Okay? It's still part of the production line cost. It's just whether it's minor or it's major. So canvas is the portion of the cost we consider as direct materials, more major. It's the main part of the backpack, right? So $71,000 is considered direct material cost, and the $1,100 is considered indirect materials. So first entry will be journalized purchasing these materials. What will be debit, what will be credit? Materials inventory will be debited, because we want to increase asset account. So materials inventory direct, and we have materials inventory indirect. And you can also merge these two, but for the purpose of clarification, it's better to separate them. Some of the examples you see, if you do practices on my lab, some of the questions may give you just one category, one drop-down box, then you know just merge them together. Okay, because theoretically this should belong to the same category. We're just understanding better the component of it. Is it direct or indirect? But it still falls under the same general ledger category. So the credit side will be what?
Accounts payable.
Accounts payable. Purchase items. So all together, 71,000, we have 1,100. This will give us $72,100. Okay, so this is the first purchasing entry. is also over there on the slide. Materials inventory, so this is an example that I merged those two. Components is still direct and indirect, but falls under the same category, general ledger materials inventory. And when it comes to requisitions, that means a portion of these raw materials are now starting to be produced and converted into finished goods. So we want to transfer those raw material costs into what?
Work in process.
Work in process and manufacturing overhead. So if we go back to the problem, what is the number that we're listing in those journals? We want to list work in process, manufacturing overhead, and we will credit materials inventory. So we decrease raw material account, we increase work in process account, increase manufacturing overhead expense account. This debit side, we would have the $64,000 for campus, work in process, and the remaining oil costs, $250 for manufacturing overhead. Add them together, in total, we're reducing materials inventory by $64,250 altogether. Okay, so the second entry looks like this. We're only using a portion of the raw materials. Okay, $64,000 direct raw materials turns into work in process. Oil cost, overhead, indirect cost. Add them together, we're reducing raw material by this amount, $64,250.
You credit materials inventory, right, at the end?
Yes, materials inventory here.
And
You're talking about this, right?
Yeah.
Mhm.
But don't you have to separate them, or it's fine?
This example here, they merge them. So you can also separate them. So during exams or other practices, if you separate them, it's still the correct answer. Okay? It's actually even better. This example here, they merge them. Okay, so these are transactions. Now remember, the accounting cycle, once we journalize them, the next step will be posting them to T accounts. Just representing the same information, but in a T account format. So if we post them to materials inventory, first of all, the transaction we had earlier was $72,100. We have new purchases. And then we assign a portion of that, $64,250, transfer them. So we reduce this by credit this account and transfer them to work in process, to manufacturing overhead. Okay, we're talking about posting these transactions to T accounts. It's representing them in a T account format. So you post them, and then the problem will also tell you that there's beginning inventory cost. Okay, so don't forget this. In each and every account, unless it's a new started business, otherwise usually you have leftover raw materials. You have halfway done inventory, you have ready completed inventory that are not yet sold out to customer. You have to consider beginning inventory level. So it tells us here that a company had $34,000 raw materials carried over to this season, which makes this T account even more valuable because we have more direct materials here. Okay, so if you post all these information to T account, it should look like this. Left-hand side, beginning inventory, 34. New purchase inventory, altogether direct and indirect. And then we assign a portion to work in process.
You put the 64,000 into work in progress and then the remaining 250 manufacturing overhead?
Yes.
Yeah.
So work in process here will be just as we journalize over here.
Yeah.
So just as you said, 64,000 here, 250 here. Okay? The last question here, if the company had this beginning inventory value, and what will be the ending balance?
41,000.
41,000.
750.
Okay, so you add up the left-hand side, assets, right? And you minus what's assigned to work in process. So whatever is the leftover value is just as you calculated, $41,050. Okay, again, materials inventory is an asset account. So asset account normal balance is the left-hand side. You first of all add up the left-hand side $2 amount, and then you minus credit side, the part that you decrease because it transfers to work in process. Okay, so what we covered so far is starting point of production line, purchasing raw materials, and starting to use these portion of these raw materials, transfer to work in process, transfer to manufacturing overhead. So next, what we need to consider would be labor cost. Okay, now labor costs, when you hire employees, of course, they have an employee number, they fill out weekly working time record, keep track of their working hours. Or they may have a contract already set, a yearly salary base, and their expected working hours. So what we need to do here is specifically track how many workers are working for this job and how many hours has been inputted to this job. That's how we track direct labor cost. Remember, we also have indirect labor cost incurred that falls under manufacturing overhead. And janitors, managers from the entire plant. So if we want to journalize this, let's say we hired 3 employees, add them together in working hours. In total, we have direct labor cost $169,000. And then we assign manufacturing overhead, people we hired, harder to trace back to a particular job. These costs incurred altogether for an entire year is $28,000. Add these two together, these will incur wages payable in total. The salary we need to pay them but not yet paid. It's called wages payable, $197,000. So this journal entry, of course, is usually not journalized until year end. It's usually on a bi-weekly or monthly basis. As the workers helps us assemble the products, as they help us generate the products, we need to journalize the labor cost that we owe them, the cost incurred to help us generate the product. Okay, so just like direct materials, we have 2 categories, direct labor. Just like materials, we have indirect, direct cost. Labor, we also have direct and indirect cost. So the direct cost, again, falls under work in process category. We have number $69,000 here. Now we have $28,000 in manufacturing overhead costs. These two together forms wages payable that we owe them, altogether $197,000.
What is work in process again?
Work in process inventory considers direct material, direct labor. And later on, when we talk about manufacturing overhead, a portion of this also assigns into work in process. So basically, it's the cost of producing a product that is not yet finished. Everything that's starting to be used, starting to be converted to finished goods, the cost incurred for this job falls under this category. So far, we just covered direct materials, direct labor. Later on, a portion of indirect costs also can be assigned to this category. Okay, so this represents the cost incurred that is not yet finished goods in the middle of production. Okay, so this information, how would this affect the T accounts? They're just posted on the whiteboard here. We have wages payable incurred, and we separate them into direct labor, goes into WIP, work in process, and direct labor cost goes into the indirect category. And we take care of this after we take care of direct materials, direct labor. Okay, so remember, this is the part that's a little bit more complicated because we need to allocate the cost. We don't know what exactly happened for each particular order based on these indirect costs, so we need to allocate a portion to each order. We'll take care of that a little bit later. In terms of representing the information on the job cost record, remember each job order has a specific record, keeps track of each categories of cost. We talked about direct materials earlier, now we add in direct labor cost. So just assuming that assembling these 10 sets of Excel DVDs costs us $200 to hire the employee who's going to work for this job order, Add these two together is 2/3 of this job order. And we have direct materials cost, and we add in direct labor cost. Okay, example. Exercise time, let's take a look at this example together. Seattle Enterprises produces touchscreen products. And these are the T accounts opened up to keep track of your manufacturing activities. So from these numbers, you can actually understand what's going on so far. You see there's materials purchased and used, wages paid and wages deferred. You see work in process, there's some numbers on debit side and credit side. So try to just use a minute to think about these T accounts and see if you can understand what the question is asking you. How much does it cost to use direct materials? How much cost is incurred for indirect materials? Direct labor, indirect labor. Now, one of the homework problems looks very similar to this one. You have to understand what's represented here in the T accounts. Wants to try the first one? Cost of direct materials used. Hope you're not all lost here. Okay, we'll take a look at materials inventory T account. Remember, it's an asset account, right? So the left-hand side, $47,000, what does that represent? Asset. It could be direct and indirect altogether combined, right? General ledger account, so it's the asset that we purchased either this period or carried over from the last period, right? $47,000. So for direct materials used would be crediting this amount in total, but remember we assign direct materials to work in process, and we assign indirect materials to manufacturing overhead. So meaning that altogether we reduce materials inventory, but we have to understand how much belongs to direct, how much belongs to indirect, and how do we get that? So then we take a look at work in process inventory category, right? No? You on track?
Direct material would be 28,000.
28,000. What about indirect?
3,400.
So if you add them together, it becomes
31,400.
31,400. Okay, so if we take a look at process, direct cost incurred, direct materials is $28,000. Remember, we assign the direct one to the work in process when we start using them. But it's not yet used, it falls under materials inventory, it's the raw materials. Once we start using them, we assign them the direct one to work in process, the direct one to manufacturing overhead.
But how would you know which one is cost? I added the 3 numbers you said.
So you'll need to pick the ones, add them together, see which one gets to $31,000. Okay, so usually it's listed by sequence, direct materials, direct labor, manufacturing overhead. Pretty much all the problems are listed. Okay, so then with this little trick, we probably could have answered the second one.
62,000.
62,000 would be the direct cost of labor, right? What about indirect cost? $12,000, exactly. Okay, so to determine the numbers here, you definitely look back at wages payable. You know all together the labor costs incurred is $74,000. You know the total. Now you just need to pick the two numbers that is the components of this $74,000. Okay, what other information do you see in this problem? And there's only 2 questions asked here because we only covered direct materials, direct labor. But just by looking at the middle 2 T accounts, what other information do you think you understand from this? Payable. Which one?
Is it interest?
74,000 is wages payable, definitely is the labor cost that we just talked about, right? So let's say, what about the $123,000 over there?
How much the finished goods are used up?
That would be how much the cost of the product we manufacture. Cost of goods manufactured would be the $123,000, $123,000. Meaning, after work in process inventory, we're producing, most likely, a portion of these turns into finished goods. Probably not all of them. So the $123,000, the reason I know it's finished goods is because you see it there in finished goods T account. So finished goods T account, later on we'll be learning, when we debit it, it means the inventory that is finished, that is completely manufactured. And then, what about the $109,000? When we reduce finished goods inventory, that means cost of goods sold, we sell to the customer, exactly. I'm just giving you some of the highlights from later slides. When we look at these T accounts, try to think of whether it's increasing the account or decreasing, and then you can get a better picture of what's happening here. Okay? Right, let's quickly introduce manufacturing overhead after this.
Yeah, I got a question.
Sure.
Why on the work in process inventory, why is the left side balance is not equal to the right?
Because this is an example that only a portion of these raw materials turns into finished goods.
Right, I understand that.
So we have beginning work in process for next period.
Okay.
Right? So the leftover, the differences between that because ending inventory for
It
this
shouldn't
period.
the balance show too? Like
It should be shown at the end.
Process is a master account, so it shouldn't have to, the balance at the end.
You shouldn't have the balance at the end. So this is an incomplete account. Definitely you should have a summary of each and every account when you produce the statements at the end. Right, this is somewhere in the middle. Okay? Yes.
I'm just curious of what the other numbers mean, the 53,900 and 36,500, because like the thing is, it's like you kind of just like put random numbers up there and then connected them because they just equal. I don't understand how like.
We're going to get to that 53,900 just a few slides later. Okay, that means manufacturing overhead that turns into work in process. So that's why you reduce that and then assign it to this job.
Okay.
Remember that manufacturing overhead is a bunch of indirect costs,
Right.
and it's hard to trace to one particular job. So later on, we'll be introducing a rate to help you calculate just roughly how do we assign it to this job, and that's the portion we're assigning to this job.
Okay.
Okay, so then all of those numbers add together produce into finished goods, then it turns into finished goods inventory. Okay, so that's a very important question for later slides, and I'm glad you noticed it. Okay. Other questions before we move on? Okay, let's get to the overhead category. So we talked about materials, we talked about labor. Overhead category consists of all the indirect costs. So we have indirect materials here. We talked about it a little bit earlier. We have indirect labor here. And now this is just showing you some examples of other indirect costs. So remember, we have machines, so when we depreciate it, it's also part of manufacturing overhead. So notice that manufacturing overhead is not an asset account, it's an expense account. Okay, so you can think of this as the same idea of period cost. It incurs every season, every period, but then we close this account, transfer these costs into work in process, and remember, revenues, expenses, they're closed out in income statement at the end of this year. Okay, so materials inventory is asset account, wages, we know these are liability account, manufacturing overhead, this is considered an expense account. Because these are the minor costs. Remember, the definition of indirect costs compared to materials, these are more minor. These are not the main costs. We consider them as an expense. So just like a financial plan, when we talk about repairing machines, I don't know if you still remember, but if there is a major repairment, it's considered capitalizing the asset. It becomes a portion of asset, adds value to the inventory, adds value to the furniture or the machine. If it's minor impairment, it's considered expenses. Okay, so think of this manufacturing overhead as minor costs incurred to help production line. It's considered expense. Just like minor impairment is not considered asset. Okay, so here are some of the examples. Depreciation, let's say $10,000. So when we journalize this, we know how to journalize depreciation from financial accounting, accumulate depreciations, depreciation expense, and now we transfer return into manufacturing overhead. Okay. And we also have utilities incurred, rental expenses, property taxes, all these, or insurance expense. These are just some of the examples. It could go on and on. Depends on each job, each manufacturing side, what has been incurred. So at the end, we group all these costs together. So we can see there's a debit balance here. All the minor costs added together worth $73,000. Now notice that here, this is the actual cost incurred. And usually this number we can only figure out at the end of the year. Because rental expense goes on, we depreciate the machines. We have property taxes that we usually calculate at the end when we file taxes. Utilities, report this as it happens every month or on a season basis. So really the actual indirect cost number, we only know this number until the end, until December 31st. So how do we assign the cost to job as these jobs are being completed? Some of the orders, probably the deadline is March 31st. We ship these DVD sets to Macy's Company March 31st, but we still have to consider indirect costs, even though we don't know the entire year's number yet. Okay, so this is the difficulty for indirect costs. We need to find some way to measure it and assign a portion of these indirect costs to each job as these jobs are being completed. Okay, so what we're trying to introduce here in the next slide is how do we assign these indirect costs? Because we don't know the actual number until year end. Now we just do a rough estimation of possibly what is the indirect cost incurred for this job, what is the indirect cost incurred for this job, and for the second job. Because remember, companies take care of multiple orders at the same time. You can't wait until year end and then go back to trace the cost, because some of the products you already sold to customer. You need to set a price. So up front in the beginning of the year, we do a calculation estimating, just expecting the entire year's overhead cost, an estimation. Not the actual number, because we don't know this until year end. And then we estimate the quantity of overhead allocation base. This may seem a little confusing right now, Basically, we're trying to find a driver, a base to divide the cost, to determine how much belongs to job number one, how much belongs to job number two. And typically, this is either based upon machine hours or labor hours. These are the cost base that's easily available for managements to use to assign the cost to different jobs. Okay, but the general idea here again, before we know the actual cost, each of the jobs are being completed in the middle of the year. We need to assign the cost to it to set the proper price. So we estimate upfront a manufacturing overhead cost based on the information we have right now from previous year. Then we divide it by a certain allocation base to calculate a rate, a predetermined overhead rate. Okay, so this is the first formula introduced in this class. How do we decide overhead costs? How do we assign it to particular jobs? First step, to calculate a predetermined overhead rate, an estimation rate. And then we understand for this job, there's labor hours incurred 100 hours. And we multiply the 100 hours by this rate. For another job, there's 200 hours. 200 hours, multiply this rate. So we'll talk about the detailed calculation a few slides later. This slide is showing the overhead rate. How do we get that? The estimated overhead total cost divided by the base. Again, the purpose here, since we don't know the cost until year end, we want to estimate the indirect cost that belongs to each and every job before we set the price to customers. Because we need to know a full set of information on direct materials, direct labor, and indirect cost. So we're estimating the part that belongs to this job using the rate that you just seen. So altogether, once again, restating the formula, estimating the total cost divided by a base selected by the formula. Basically what this rate means is, if the allocation base, let's say, is machine hours, so the more machine hours is used for this job, then the more indirect cost is assigned to this job. The less, if it's using labor hours for allocation, and the more labor hours, the more employees working hours is assigned to this job, the more indirect costs incurred for this job. So each and every job will have a different indirect cost assigned based on how many actual hours has been used for the job, and then multiply the rate. Okay, let's take a look. So some of the companies use, again, employee working hours. Some of the companies use machine hours if it's machine-intensive productions. If the product definitely needs machine involved and it's heavily involved in machines instead of actual employees assembling the process, then it would consider to use machines. Okay, so we predetermine a rate. Here's an example. Let's say the total estimated manufacturing overhead cost, again, this is an estimation, not the actual cost, $68,000. And let's say the management level decides to use direct labor cost as a base. The labor cost incurred for this job is $170,000. So what does this 40% mean? It means per dollar of direct labor cost incurred, there are 0.40 cents incurred for indirect cost. It's a ratio between direct labor cost and indirect cost. So if this job incurs $10 of labor cost, actual labor cost, then altogether there will be $4 of indirect cost. If there's $100 of direct labor cost incurred, there will be $40 of indirect costs, so on and so forth.
So, let's say it was $10 of direct labor cost. Of the $10, $4 would be the cost of
Meaning the indirect cost will be $4, but it's not of the direct labor cost. It's just,
Okay.
we're using the direct labor cost as like a base for comparison. Okay, but the concept is correct. You get, here it is. We're trying to measure indirect costs by some sort of base. It's either based on direct labor costs or machine hours. So here's an example. If we base it on labor costs, per dollar of labor cost incurred, we will have $0.4 of indirect costs. So the more labor hours incurred for a job, the more indirect costs is incurred and assigned to that job.